Welcome to this presentation on Emperador Incorporated and its subsidiaries. In the next few minutes, we'll explore the company's operations, business model, and financial performance, leading to a final stock recommendation based on a 5-year analysis and looking forward forecast. We are consultants and will be guiding you through Emperador's journey from a proudly Filipino enterprise to a recognized global leader in spirits.
Emperador Incorporated is a leading global spirits company headquartered in the Philippines. Its mission is to craft world-class alcoholic beverages that bring people together while showcasing Filipino excellence to the world. The company operates as a subsidiary of Alliance Global Group Inc. And today, its portfolio includes premium brandy, whiskey, and other spirits. Notable brands include Emperador Brandy, Fundador, and White and Mackay. Founded by Dr. Andrew Tan, Emperador began as a local brandy producer and grew rapidly through strategic acquisitions, most notably White and Mackay in Scotland and Fundador in Spain. These moves transformed it into a truly international player. Dr. Tan's leadership and vision for diversification and sustainable growth continue to shape the company's expansion strategy. Under his direction, Emperador has built a strong leadership team focused on innovation, operational excellence, and global reach while maintaining disciplined financial management.
Moving on to the operating activities and business model. Emperador's business model revolves around creating, delivering, and capturing value across the global spirits market. Its core operations include the production, aging, bottling, and distribution of alcoholic beverages, primarily brandy and whiskey. The brandy segment is anchored by Emperador Brandy, the world's best-selling brandy by volume. The whiskey segment, through White and Mackay, includes premium Scotch labels with deep heritage and international appeal. The company creates value by investing in high-quality sourcing, modernized production facilities, and skilled craftsmanship. It delivers value through efficient global distribution networks, ensuring strong market access in Asia, Europe, and the Americas. Finally, it captures value by pursuing premiumization, effective pricing strategies, and robust brand management. This combination of brand strength, production scale, and distribution efficiency enables Emperador to sustain profitability and leadership in multiple markets, positioning it as a truly global spirits company.
Let's now examine Emperador's balance sheet and overall financial position. Total assets grew consistently from 122.45 billion in 2020 to 159.53 billion pesos in 2024, reflecting strong expansion and continuous investment in production facilities and international operations. Shareholders' equity rose from 67.36 billion to 100.53 billion, signaling significant value creation for investors. Current ratio improved from 2.4 to 4.08, while quick ratio increased from 1.15 to 1.48, confirming a robust ability to meet short-term obligations, while debt-to-equity ratio declined from 0.38 to 0.20, showing reduced leverage and a stronger capital structure. Overall, Emperador's balance sheet demonstrates solid asset growth, ample liquidity, and declining financial risk. The company continues to balance debt and equity effectively, ensuring both flexibility and stability as it funds expansion projects. Turning to profitability and operations, Emperador's performance in 2020 to 2024 reveals resilience amid market shifts. Revenue peaked in 2023 at 65.64 billion before easing in to a comfortable 61.65 billion in 2024. Net income reached a high of 10.15 billion in 2021, then moderated to 6.49 billion in 2024, largely due to higher costs and changing global demand patterns. Consequently, the net profit margin declined from 18% down to 11%. The DuPont analysis shows that return on equity fell from 12.9% in 2021 to 6.5% in 2024, primarily driven by the lower profit margin, even as asset turnover remained efficient. EBITDA followed the same pattern, peaking at 15.22 billion in 2021 and easing into 11.39 billion in 2024, suggesting rising production and distribution costs. Despite these declines, Emperador remains profitable and operationally sound. Its ability to generate positive EBITDA and sustain healthy margins amid the cost pressure speaks to the underlying strength of the brand and management discipline.
Now, cash flow analysis. Cash flow tells the real story of financial flexibility. From 2020 to 2024, Emperador maintained overall liquidity, though with some year-to-year fluctuations. Cash and cash equivalents reached a high of 12.74 billion pesos in 2022 before normalizing to 9.74 billion pesos in 2024. Trade and other receivables climbed steadily to 20.2 billion pesos in 2024, indicating continued business activities. Now in 2024, operating activities produced 5.3 billion pesos in cash inflows, while 7.2 billion pesos was invested in capital expenditures and acquisitions. Financing activities added 1.1 billion pesos following year debt repayments and dividends. Despite Emperador's strong balance sheet, we observed noticeable volatility in its cash and cash equivalents. A sharp increase of 36.5% in 2022, followed by declines of 17.5% in 2023 and 7.4% in 2024. So, what does this tell us about the company's cash management and investment strategy? First, this pattern suggests dynamic resource allocation. Emperador isn't just holding onto cash, it's actively managing its liquidity. The spike in 2022 may reflect strong operating performance, asset divestitures, or possibly a financing inflow such as new debt issuance, all of which temporarily boosted cash reserves. Second, the declines in the following years indicate aggressive reinvestment. Rather than signaling weakness, the drop in cash aligns with rising capital expenditures and asset expansion, showing that the company strategically deployed funds into growth projects, capacity upgrades, or acquisitions. Third, from an operational perspective, this volatility does raise questions about cash flow stability. It's worth examining whether the decreases were purely investment-driven or partly tied to working capital pressures, like slower receivable collections or higher inventory levels. In summary, the volatility points to a company that's confidently reinvesting in its future, using its strong balance sheet to fund expansion. However, it also underscores the importance of robust cash flow forecasting and day-to-day liquidity management to ensure that growth never comes at the expense of financial flexibility.
Let us look ahead our financial forecast for 2025 through 2030. Our methodology combines two core approaches. First, we extrapolated historical trends for balance sheet items using verified data. Second, we applied a set of hypothetical but realistic assumptions for income statement growth and profitability margins. These assumptions were integrated into a three-statement financial model, ensuring alignment between the income statement, balance sheet, and cash flow statement. Here, we can see the projected income statement, which includes illustrative 2023 and 2024 data alongside forecasts through 2030. Graph highlights the trend for revenue and net income. Under our assumptions, revenue grows steadily year over year, driven by strong brand performance and an expanding global presence. This translates into consistent net income growth, supported by the assumed stabilization in margins. EBITDA follows the same pattern, confirming robust operational profitability before the impact of financing, taxes, depreciation, and amortization. Overall, this projection reflects sustainable earning growth and operational efficiency, which are essential indicators of long-term financial health. Moving to the projected balance sheet, we see how Emperador's financial position is expected to evolve over the forecast period. The chart illustrates the upward trend across total assets, liabilities, and equity. Total assets are projected to grow strongly, reflecting continued investments in production, facilities, and brand development. Liabilities, however, grow at a slower pace, roughly 2.5% per year, which points to controlled leverage and prudent debt management. The key driver of expansion is equity, forecast to rise by about 10% annually, fueled primarily by retained earnings. This signals that future growth is being financed internally rather than through additional borrowing, strengthening the company's capital base and improving shareholder value. Now, we turn to the projected cash flow statement, which shows how cash is generated, invested, and financed through 2030. Operating cash flow remains robust throughout the period, indicating that the company's core business continues to generate substantial liquidity. However, the investing cash flows are significantly negative, reflecting aggressive capital expenditures aimed at capacity expansion and modernization. This creates a temporary funding gap between operations and investment, which is bridged by financing cash flows. In other words, while Emperador's operations are healthy, the scale of investment requires targeted external financing, whether through debt, equity, or retained cash, to support growth. Despite this, the ending cash position remains strong, reflecting careful liquidity management and strategic allocation for resources. Finally, let's review the key projected financial ratios, which distill these forecasts into forward-looking performance indicators. Liquidity ratios such as the current and quick ratios remain strong, ensuring the company can comfortably meet its short-term obligations. Solvency continues to improve, evidenced by a declining debt-to-equity ratio, which highlights a stronger and more conservative balance sheet. Profitability ratios, including net profit margin and return on equity, stabilize or show slight improvement, consistent with sustained operational performance and efficient capital use. Asset turnover remains steady, confirming that assets are being used efficiently to generate revenue. Taking together, this matrix portray a company positioned for balanced growth, financial stability, and long-term value creation, provided it continues to manage costs and investments with discipline. In short, the forecast reflects growth in scale but thinner margins, highlighting the need for cost control, pricing efficiency, and renewed focus on cash flow generation.
Let's summarize our findings and final recommendations. Strengths: strong asset growth and improving solvency, globally recognized brands, and diversified geographic footprint. Excellent liquidity and conservative debt management. Weaknesses: declining net income and EBITDA margins in recent years, and forecasted pressure on operating cash flows. Opportunities: expansion in the global premium spirits market, and strategic acquisition and product innovation. Threats: intense competition, shifting consumer preferences, and macroeconomic headwinds that may dampen discretionary spending. Considering all these factors, solid balance sheet health but softening profitability, the prudent stance is to hold recommendation. Emperador remains financially sound and globally positioned, yet short-term earnings headwinds limit immediate upside potential. A hold view allows investors to benefit from the company's long-term prospects while monitoring its ability to restore higher margins and operational cash flows. In reviewing Emperador's performance, our analysis of the historical DuPont breakdown reveals a clear decline in both net profit margin and return on equity from 2021 to 2024. This indicates some erosion in profitability as operational costs and market pressures appear to have weighed on margins over the past few years. However, while profitability has softened, the balance sheet tells us a much stronger story. Emperador remains financially solid with a high level of liquidity, improving solvency ratios, and consistent growth in both assets and shareholder equity. The company is not in any financial distress. In fact, it's in a position of strength. This combination of weaker short-term profitability but strong financial fundamentals led to the recommendation to hold, with a leaning towards cautious expansion. The hold recommendation recognizes that while profitability has dipped, the company's financial resilience provides a strong buffer against operational challenges. It has the flexibility to absorb short-term pressures and the capacity to improve performance through cost management, strategic pricing, and product innovation. At the same time, I emphasize cautious expansion as Emperador's strong balance sheet gives it the means to grow, but that growth should be strategic and disciplined, focused on investments that directly address the causes of profitability decline and drive marginal recovery. Therefore, hold with cautious expansion reflects both confidence in Emperador's strength and awareness that sustained profitability improvement is the key to unlocking greater long-term value. As we look ahead, one thing is clear: Emperador's journey is far from over. From its roots in the Philippines to the shelves of Europe and the Americas, the company has proven that Filipino craftsmanship and global ambition can stand proudly on the world stage. Its balance sheet is strong, its brands are iconic, and its vision is unwavering: to build not just a business but a legacy of excellence that transcends borders. The years ahead will test every company's ability to adapt, innovate, and lead. But if the past 5 years have shown us anything, it's that Emperador thrives under challenge, transforming uncertainty into opportunity and ambition into achievement. And so, as Emperador raises its glass to the future, it does so not just as a market leader, but as a symbol of how far Filipino enterprise can go when guided by vision, resilience, and relentless pursuit of greatness. Emperador, built with heritage, fueled by ambition, and destined for global distinction.